Bitcoin, the world's premier cryptocurrency, has ascended to previously uncharted territory, scaling the $47,000 peak for the first time since April 2022. This surge comes amidst a palpable anticipation in the cryptosphere, fueled by the imminent verdict on a landmark exchange-traded fund (ETF) application, a decision that could potentially reshape the landscape of digital asset investment. A bullish brew, catalysts behind the climb. Several factors have converged to propel Bitcoin's current rally. Institutional interest. Traditional financial institutions, once wary of the nascent asset class, are increasingly warming up to Bitcoin. Prominent hedge funds and investment banks are allocating portions of their portfolios to the cryptocurrency, bolstering its legitimacy and driving demand. Macroeconomic tailwinds. With inflation rearing its head globally, Bitcoin is being viewed by some as a hedge against traditional asset depreciation. Its finite supply and decentralized nature offer a compelling alternative to fiat currencies susceptible to inflationary pressures. Technological advancements. Developments like the Lightning Network, which facilitates faster and cheaper Bitcoin transactions, are enhancing the cryptocurrency's utility and scalability, drawing in a wider user base. Positive regulatory sentiment. Regulatory frameworks regarding cryptocurrencies, once considered opaque and restrictive, are gradually evolving towards clarity and acceptance. This shift instills confidence and encourages larger players to enter the market. The looming ETF, a potential paradigm shift. The impending decision on the first-ever U.S. Bitcoin ETF application, filed by Van Eck, has captivated the attention of investors and industry players alike. Approval would undoubtedly mark a watershed moment for the burgeoning digital asset class, granting retail investors easier access to Bitcoin within a familiar regulatory framework. Proponents of the ETF argue that it would unlock sizable inflows from traditional investors, further boosting Bitcoin's price and liquidity. It could also legitimize the cryptocurrency in the eyes of financial institutions, leading to the development of sophisticated financial products and services around Bitcoin. However, concerns linger about potential market manipulation and regulatory complexities associated with ETFs. Opponents express fears that it could exacerbate Bitcoin's price volatility and expose retail investors to undue risks. The U.S. Securities and Exchange Commission, SEC, is expected to deliver its verdict on the Van Eck application within the week. Regardless of the outcome, the sheer anticipation surrounding the decision has undoubtedly contributed to the current bullish sentiment in the Bitcoin market. Beyond the peak, exploring the road ahead. While the recent price surge marks a significant milestone, it's important to acknowledge the inherent volatility of cryptocurrency markets. Bitcoin's journey has been characterized by boom and bust cycles, and navigating this dynamic landscape requires caution and long-term perspective. Several uncertainties cloud the future trajectory of Bitcoin. Regulatory landscape. The evolving regulatory environment remains a key variable, with the potential for stricter regulations impacting market dynamics. Technological advancements. Continued innovations in blockchain technology and the broader cryptocurrency ecosystem could unlock new use cases and drive further adoption. Macroeconomic headwinds. Global economic fluctuations and unforeseen events could influence investor sentiment and impact Bitcoin's price. Despite these uncertainties, the recent market resurgence underscores the growing recognition of Bitcoin's potential as a transformative asset class. Its underlying technology, blockchain, exhibits immense promise for revolutionizing various industries, from finance and supply chain management to healthcare and data security. The ETF landscape, a spectrum of options. The pending Bitcoin ETF decision is not a binary yes or no, rather, it opens the door to a diverse landscape of potential ETF structures, each with its own implications for the market and regulatory considerations. Here's a closer look at 3 key types. Physically backed ETFs. These directly hold underlying Bitcoin, mirroring its price movements and offering investors closest exposure to the asset. Advantages include transparency and security, as the ETF custodian safeguards the Bitcoin. However, concerns arise around storage costs, security vulnerabilities, and potential legal hurdles in securing large amounts of Bitcoin. Futures-based ETFs. These track Bitcoin's price through Bitcoin futures contracts, offering greater flexibility and potentially lower expense ratios. However, they introduce counterparty risk, reliance on futures exchanges, and potentially higher volatility due to the leverage inherent in futures contracts. Synthetic ETFs. These use derivatives like swaps or total return swaps to track Bitcoin's price without directly holding the asset. This structure avoids storage and security concerns, but raises complex credit and counterparty risk considerations. Each type carries unique regulatory hurdles. The SEC has expressed concerns over manipulation risks in futures-based and synthetic ETFs, favoring physically backed structures, despite their logistical challenges. Regardless of the chosen structure, robust investor protection measures and strong anti-manipulation frameworks remain paramount. Contrasting visions. Bitcoin's future awaits. The potential future of Bitcoin sparks fervent debate, with proponents and critics painting vastly different pictures. Optimists envision a bright future. Financial inclusion. Bitcoin's borderless nature and ease of access could empower the unbanked and underbanked, facilitating financial inclusion and wealth creation globally. Store of value. Bitcoin's limited supply and perceived resilience to inflation could make it a valuable hedge against fiat currencies, particularly in economically unstable regions. Technological revolution. Blockchain technology, underlying Bitcoin, holds immense potential for revolutionizing industries like finance, supply chain management, and healthcare. Widespread Bitcoin adoption could act as a catalyst for this technological leap. Cautionary voices raise concerns. Environmental impact. Bitcoin mining's significant energy consumption raises environmental concerns, potentially hindering wider adoption and attracting regulatory scrutiny. Volatility and price manipulation. Bitcoin's inherent volatility poses risks for retail investors, while concerns about market manipulation and fraudulent activities remain unaddressed. Regulatory uncertainty. The evolving regulatory landscape poses challenges for businesses and investors, potentially stifling innovation and adoption. The future of Bitcoin hinges on these competing narratives. Addressing environmental concerns, fostering responsible market practices, and navigating regulatory complexities will be crucial for Bitcoin to fulfill its potential and achieve mainstream adoption. Investment value, a case for consideration. Despite the risks, Bitcoin offers several potential benefits for investors. High growth potential. Bitcoin's historical price trajectory suggests significant potential for capital appreciation over the long term. Portfolio diversification. Bitcoin's unique characteristics and low correlation to traditional assets can enhance portfolio diversification, mitigating risk. Hedge against inflation. Bitcoin's limited supply and perceived inflation resistance could act as a hedge against potential inflationary pressures in fiat currencies. However, investors must approach Bitcoin with caution and due diligence. Thoroughly understand the risks associated with its volatility, liquidity, and regulatory landscape before committing capital. Diversification, responsible market practices, and a long-term perspective remain key guiding principles. The current Bitcoin rally, punctuated by the anticipation of an historic ETF decision, presents an opportunity for reflection and informed engagement. By delving deeper into the intricacies of different ETF structures, contrasting future perspectives, and understanding the potential investment value, individuals can make informed decisions and navigate the evolving landscape of the world's premier digital asset.